Welcome back, everyone, to Ready, Set, Sold. I'm your host, Bryan Vogt. Thanks so much for joining us this Saturday morning. As I mentioned earlier in the opening segment, I've got some special guests, and they've been on the program actually, I think, a couple of times. Deb Rust and Dave Hohe of New American Funding, and they've got some really exciting news that helps not only buyers but also sellers too. First off, hey guys, how's it going?
Hi, good. How are you?
Hey, Brian. How are you, sir?
I'm doing great. You know, I guess I'll turn it over to you because you've got a product we talked off air that really virtually that your company, it might be about the only ones left to be able to do it. And we wanted to get you on here so you can talk about what you call, I guess, a 1% program. Maybe you can kind of fill in the details.
Yeah, so essentially what we're offering is we were able to get clients into a home with conventional financing with only 1% of their own funds for down payment. So New American Funding, we're servicing the loan, which gives us the ability to gift the other 2% of those funds so the borrower's not coming in with that. So, for easy math, on a $100,000 purchase, instead of the borrower bringing in $3,000 plus closing costs, they would actually just be bringing in the $1,000. And obviously, as the purchase price of the home goes up, percentage is going to tell you that they're going to be bringing in far less than they would normally would with the standard 3% down. Reduced mortgage insurance, minimum credit score is 640, which is really low actually for conventional financing as well. So it just gives us a lot of flexibility and buyers as well. So,
Deb, who would this best serve? Or who are you seeing that's taking advantage of this program the best?
Yeah, so where we're seeing it is, we're in an area where first-time homebuyer grant programs are, something almost everyone asks about, but not everybody fits into the grant guideline, be it credit score, just what they're deciding how long they're gonna live in the home. If they're planning on only living there a few years, the grants, sometimes you have to pay them back, so it's not an ideal. There's a recapture. Also, the grant programs have gotten smarter, and they put restrictions on debt to income ratios as well as credit scores. And with this conventional 1% down program, the credit score is less than what the grant normally requires. The debt to income ratio is you're able to go a little bit higher on the DTI. So we're just finding a lot of people that are hesitant about the grant or on the fence about the grant and don't really have the full down payment to offer the 1% down conventional, and it's just a no-brainer. It's a really good program.
Yeah, and just if I can add to that, Brian, you're just as a buyer, there's a lot going on in the process when you're purchasing a home. Obviously, there's a lot of paperwork and things, and you're jumping through hoops, and we try to make that as easy as possible, obviously, here. But with the grant programs, you have a lot more of that paperwork, and sometimes the buyers can get confused. I mean, they're great programs, but with this conventional 1% down program, it's far less paperwork, less time, less hassle, and obviously less money. So it's really a fantastic program we've seen, and we've captured a lot of business here recently with it.
So what I'm hearing you is it's not only more economical for a buyer as far as not having to have that down payment, but I'm also hearing is that it sounds like it's a smoother transaction. So PMI, and Deb, you might want to maybe tell some of our listeners to know what PMI is.
PMI is mortgage insurance for the lender. So whenever you don't have your 20% down payment, there's always mortgage insurance on the deal until you do reach that equity position, and that's just the insurance for us in the event that people stop paying.
Yeah, so it's an added cost to the buyer each month, and you obviously want that to be as little as possible. With this program, you're going to pay less than you would other standard programs where PMI is required. So it's a really, really good program in a lot of different areas, but obviously that's certainly one as well.
And one of the things that we hear from buyers working with buyers, and even, sellers become buyers also at 90 to 95% of the time. But one of the things we hear, and the reason why I wanted to bring up PMI just a little bit on that, was this, look, unless you're putting 20% down, which is, quite frankly, rare, it just doesn't happen very often, PMI is a useful function, and that sometimes I think there's misnomers that buyers say this is a terrible thing and what have you. In reality, and I think you guys could speak to it more than than myself, it's actually a blessing, because if you literally did not have PMI, you literally would need to have 20% down. That hasn't changed, has it?
Right. No, it's it's just like any insurance, car insurance, medical insurance. It's it stinks to pay for it because 90% of the time it goes towards nothing. But it's when you need it and when it's there, you're happy to have it.
Awesome. And now my understanding, too, that we talked, just so you know, we're talking with Deb Rust and Dave Hohe of New American Funding this morning, and we're talking about this 1% loan. And as I mentioned, that you, especially in the Metro East area, and I'm sure you guys are nationwide, are one of the few companies that still are able to offer that, because unfortunately some of the things have changed. And Dave, what's exactly changed? Is the program, I understand, is coming to an end?
Yeah, so we are actually, there were two different versions of it, Freddie Mac and Fannie Mae, which, not to get into all the details of that, but Freddie Mac had quit doing it. So there were a lot of lenders doing it several months ago, and they were all kind of pulled off the table when Freddie had decided to quit offering the program. So we had, as a company, had foreseen that would maybe happen, so we actually signed up with Fannie Mae as well, which obviously most companies didn't. So we're still able to offer it, but we just got notification that Fannie is pulling the plug on it as well at the very end of February. So we're trying to take advantage of it while we can over the next 60 to 75 days or so, as far as getting deals working and getting them into the underwriting pipeline. I mean, we're averaging about a 21 to 22 day close. So as long as we can get the contracts by probably the beginning to the first week of February, we could still get them closed and get the 1% down for that buyer or buyers. So,
and that's a great point. I'm glad you clarified that. So, Deb, what I'm hearing from Dave is that you have to be able to close by the end of February. You can't write the offer February 26th or 27th. Is that correct?
Right. Yeah, we'd like to get the offer written. As you said, we can. We're not scared of a 2-week or a 3-week close, but we need to get the offer in writing by the first or second week of February. And it's a perfect time to do it. You always see the business slow down around the holiday season, and that's just because people are spending more money, gifts and whatever, than they normally would throughout the year. So this is kind of a good way to keep the business going. If they know.
No, that's excellent. No, I love what you said there. And if you guys have some more time, I'd like to maybe talk, if you can stay over for the next segment, one of the issues that we're having a rash of, and there's a couple of things I really want to talk to you about, but one of them is that pre-approval, pre-qualification letter and knowing the difference. And if you've got the time, I'd like you to talk in the next segment a little bit more about that, because I know you guys have some fantastic programs that you can get that done very, very quickly for buyers, which is a blessing for sellers, naturally, because everyone wants to know where the money is. So you guys have a few extra minutes to talk in the next segment?
Right. Dave's heading out to an appointment, but I'll be happy to stick around for you.
You're listening to Ready, Set, Sold with your host, Bryan Vogt. And while you're going and listening to the commercials, go to readysetsold.org, net.com. Pick up my free book. It's absolutely free. Go to readysetsold.org, net.com, and get the book. It's well worth the investment, and that's not only that it's free, but also the time. Take a look at it. You can have some great success selling your house. With that, we'll be back in a few.